Hello, my valuable viewer. My name is Simeon, and as I always say, I'm not a trading guru, but I'm someone far more useful. I'm a Forex and CFDs industry insider. For the last 10 years, I worked for top global Forex and CFD brokers, and my main job was to help novice traders, people probably just like you, to get started, to understand trading platform, to understand trading in general, to understand the risk involved, and of course, to make money. Now, over that decade, I've managed thousands of live trading accounts, and I know why 80% of people statistically lose money in trading and what makes them to lose that money, and what makes the other 20% to stand out, why other 20% make money in trading consistently. I created this channel to share with you these experiences, and the most important, to share you the insights of the trading from the broker's perspective, information and the knowledge that the brokers do not want you to know. So all that knowledge that I gathered for the last 10 years from the perspective of the traders and perspective of the broker, I'm just combining together and I'm delivering that to you in a very simple language, and I'm calling it a Mickey Mouse language. So trading is overcomplicated, and in fact is not that difficult to understand how to make money and how to mitigate your risk. And that's exactly why I'm running this channel now, is to help you to understand that and to help you to make money. We already had a couple of sessions together. You can watch my videos on how to get started, how to understand what your trading account consists of, what is the risk level and stuff. In my last session, I help you to understand how to open your trades using free technical analysis. So you don't need to pay for signals, you don't need to subscribe and then obviously trust someone that you don't even know to get that signals. And I showed you how to trade technically using free signals and understanding what direction to trade. So we opened free trades on technical analysis last time. So today's session will be something different. On today's session, we will discuss January. So in fact, we're gonna go and observe the whole January, day by day, through my Telegram channel, because I have a Telegram channel where I'm posting the most essential news without any hype, without any water, just straight to point, things that really shaking the markets. And that's what we're gonna do. We're gonna go through the month of January, day by day, analyzing how the prices were changing for different assets, and of course, where the prices are now. Why is this important? You may want to ask me, like, why to go and observe, let's say, the whole month, the previous month, right? I want you to understand one thing about trading. That's majority of people, probably just like you, they don't follow news on a daily basis, but the news coming every day, right? Now, when the news coming out, it actually impacts the market and impacts different assets in the market. So when you don't watch the news like majority of people, okay, and you go to trade, so when you open your trading account and you go and see your gold, or you go and see, let's say, your euro US dollar, you see the current price. But what you don't know is that what brought the price to this level now? Why the price now is at this level and not at a different level, for example? Okay, what circumstances happen? What been going through the whole month, let's say, right? And like I said, the reason. You need to understand the reason why the price is here before you decide where the price will go. So this is why it's important to observe markets on the every month, let's say, to understand the performance of different assets, because during the month, a lot of things happening that create opportunities for trading. Sometimes things going up so that you expect them to go down, sometimes things going down, right? And you expect them to go up. Following the markets on a daily basis is crucial if you really want to succeed in trading. Now, like I said before, majority of people don't have time for it. They either work, or even when they see the news or read the news or hear the news, they don't understand what that really means and how that news can impact, let's say, their trading, or what that news can do them in the returns of in terms of returns. So as I just said now, a lot of people don't follow the news on a daily basis, and even when they hear something that happened, they don't understand how to react on that. So on my Telegram channel, I'm just putting together the most important news that create the impact in the market and create opportunities. So now we're going to go step by step, day by day from January to understand that 5 class of assets that we previously discussed on our sessions that you now have access to once you have your trading account. And we're going to see the dynamic of the price movements on different class of assets. And then you will see where the prices were in the back in the January, let's say in the beginning, and where the prices are now, and what's the most important, where the prices of different assets are expected to go. So therefore, we're gonna go to my screen now, and you're gonna look at my Telegram channel, as well as we're gonna be observing the markets together live, and we're gonna see what happened through January, and we're gonna see what kind of opportunities the markets is giving you, first of all, today. All right, so let's get started. Looking at my screen, on the right-hand side, you can see my Telegram channel. The one that I told you that we're going to be using now. On the left-hand side, you can see a trading platform that we used last time. I just want to remind you that last time when we had a discussion about trading platform, I told you that now you have access to 5 different class of assets that you can trade. Forex, number 1, crypto, number 2, stocks, number 3, commodities, number 4, and indices, number 5. So that 5 class of assets that now available for you to trade. And today we're going to discuss the dynamic on all these class of assets one by one, just to see what happened, and then to see what opportunities we're having today. Now, I'm gonna go and I'm gonna look from the last day of the year, 31st December, just for you to see how the year ended with the gold, silver, Bitcoin, and S&P. So gold, silver, and S&P gone to record highs. Right, Bitcoin though gone down to 87,000, so it dropped down a lot. So if you look now, all right, and observe the annual returns, let's say on different class of assets, you can see that silver in 2025 gone up by 130%. Okay, gold gone up by 65%, copper gone up by 35%, Nasdaq gone up by 20%, and S&P gone up by 16%. So you can see Bitcoin drop down by 6 and Ethereum by 12 and altcoins go down by 42. So that was a very good year, let's say, for the whole stock market, for the silver and gold, and very bad year for cryptocurrencies. That's probably what you can see. Now, moving forward, I would like you to, first of all, pay attention to these assets that we discussed. So we're just talked about gold, silver, S&P, and Bitcoin. So let's observe this class of assets in order for you to understand how they moved. So we're gonna go to commodities first, and in commodities we're gonna go to gold. We're gonna look at gold and then look what happened. Wow, look at this. Gold today dropped down by $48, but we're gonna observe gold, let's say, on the daily basis. You see, every candle now represents 1 day movement. So you can see the steady upward trend on gold going up and up and up and up until the 29th of January, where the gold reached $5,680. Right, so since then, since the 29th of January, which was 6 days ago, a week ago, gold from $5,600 dropped down to $4,400. There's a reason for it, why the gold was going up and why it's actually dropped down. We will observe that through that Telegram channel, like I said. So look at gold, it gone up that much and then dropped down, but steadily it keeps going back up again, and today it's at 4,900, right? Let's move forward, and this is, like I said, gold, okay? If we go back and look at silver, so look at silver, and then same situation with silver. Let's observe that on the daily basis. Look at the steady trend going through the whole 2025 on silver, and then reaching again the highest level on the 29th of January at $123, and then dropping down to 69, like half of it, like 50% drop within the 1-2 days that the silver actually experienced just recently, right? So it dropped down to almost $70. And again, there's a reason for it that we will discuss shortly. And then we'll look at S&P 500. Now, remember, S&P 500, that is an index that includes 500 biggest companies in the US. So if we look at S&P 500, okay, and we're gonna observe the graph, I would like you to also look at the daily, let's say, graph. You see, daily, you don't really much understand. On the weekly, weekly means that every candle here represents 1 week movement. So you can see that starting from the, let's say, 4th of April 2025, the S&P 500 index was increasing, so that 500 biggest companies in the US were going quite well. But if you look at the last, let's say, several weeks, that the index is not really going up, it's just keeping going sideways, right? So it's a lot of uncertainty in the market right now. Now with Bitcoin, it's pretty simple. You see it gone down to 72,000, right? And it was basically crashing through almost all the year. We will check that also later. Now, moving forward. So here on the right side, you can see the small video on how inflation actually eats your money sitting idle. So say, for instance, you have some money on your saving account, and if you don't use that money, let's say to invest, then inflation makes your buying power of your money to go lower and lower and lower every single year. If you look at dollar, for example, since 2002, right, we're talking about now 24 years, right, dollar has lost like half of this value. You see, like 55%. So half of the value of the dollar, all right, it's actually gone for the last 20 years, and that's what happens. Like euro, you see basically 40% of the value of the euro gone down, and Swiss franc, like you can see here, about 20. So what I'm trying to say here, all right, inflation, that's how it actually works. It's just a very simple example on that. Now, again, we're going forward, and we're looking now January 1st, right? We see again gold, silver, platinum, palladium, all that basically the trend that was for the whole year, let's say 2025, and all these assets closed down in record highs. Now, 5th of January, that's where the actual trading started. You see Bitcoin was at 92,000, right? Starting from that day. Dollar index, okay? The dollar index was at 98.76. Today, as you can see here, dollar index is 97. It measures the strength of the dollar. Now, we're gonna go forward, and we're gonna see oil was at $60, right? Gold was at 4,400, and that was in the beginning of January, right? Let's move forward. On my channel, every week, all right, every beginning of the week, I'm posting the most essential news that are coming through the whole week. Things that really make the markets change, right? I mean, the prices in the market to change, to go up and down. And this basically is broken down by the country and by the time and by the report. So knowing what is expected to happen basically in the week ahead of your trading will give you a lot of advantages of how to avoid, let's say, some problems, or how to take advantage of some reports and actually trade it to make money. So knowing what is going to happen is giving you, like I said, an advantage of taking steps to either protect yourself or to make money on it. Now, we're going forward, and we're looking at a company called NVIDIA. So the value of NVIDIA as percentage of gross domestic product in the US gone up to 16% of the whole US gross domestic product. Now, NVIDIA, just for those that maybe never heard of that company, all right, or maybe you know the company but don't know what they do, NVIDIA is one of the biggest companies in the world that has a market capitalization in trillions of dollars, about $4 trillion, right? And they are on the front edge with AI technology. So if you look at NVIDIA, let's say on the weekly, right, you can see that the company was going up since April 2025 up until the October, and then it just dropped down from 215 to 174. And also there is a reason for it, because there's a lot of rumors that AI is a kind of a bubble, and there was a lot of rumors during January. You will see that. Now, look, NVIDIA, as we said just now, okay, gone to the level where it's already counting 16%, right? That's how big is that company. Now, moving forward, the number of AI mentions by S&P 500 companies on earning calls growing rapidly. This actually means that it's a lot of mentions. So a lot of companies are actually talking about AIs, and they're actually either using it or about to use or about to invest into it and stuff like that. So AI is still number one thing in the world going now. So look at this. This is about now dollar index. You see, Goldman expects further weakening in the US dollar against major currencies by the end of this year. So the dollar index has been falling for the 2 weeks already. Now, I would like you to look at the dollar index. So like I said, dollar index measures the strength of the dollar, right? And if you look at, let's say daily, in the last 1, 2, 3, 4, 5, 6, 7, one week that the dollar is getting stronger. But if you look weekly, every candle now represents one weekly movement. You see that the dollar now is at basically at the level 95 to 90, let's say 99. Oh, sorry, my bad. Okay, what did I do? Here we go. So it's actually, like I said, the range, it was coming to 95, but it couldn't break it. So it's just ranging somewhere here, right? Going that way. But if you put on the monthly, right? So now you can see that starting from the 1st of January 2025, the dollar was going down, right? The dollar index from 110, it gone down to 97. That's a huge decline, right? It's about 10% that it lost in value. All right, moving forward. Now, moving forward, 6th of January, Bitcoin 93,000. Okay, US dollar index 98, right? And then gold 4,400, as we said. Okay, silver 78, right? Now, fear and greed index. Fear and greed index, by the way, it's one of the indicators that is available for you now. Okay, you can go and search it very simply by just going to open a new tab and then fear and greed index. Here we go. Fear and greed index, and we're gonna go and check it. So now, for instance, if you look at today, the fear in the market is 44. What does it mean, fear and greed index? It actually measures the sentiment of traders, measures the sentiment of people that expect if the prices will continue going lower, if the prices will going higher. So what they actually feel emotionally, and it measures because they just do some sort of like pulse or something. So now it's at the 44, let's say, number, and it's actually still in fear. Not an extreme fear, but still in fear. Now, you will see how that reacts in the market. When the market is on the fear or an extreme fear, you can expect the markets to start, let's say, growing, because when the market is going into that fear zone, right, it's a lot of, let's say, uncertainty, but it also creates an opportunity to buy something from the dip. So now the market's going to a fear zone and we moving forward. So let's move forward. Okay, and then look, the 7th of January, Bitcoin is at 92,000, all right, drop down, dollar index 98, Brent oil 59, gold 4,500, 4,450, right? Revenue from Trump's tariffs continue to break records. You can see how the revenues from the Trump's tariffs, by the way, since he put the tariffs on the different countries, so the revenue goes from there. So they actually, receiving a lot of money. That's what it actually shows. Now, gold has reached critically overbought level. That was the news from 7th of January. So on the 7th of January, when gold came to a level of 4,200, okay, they were worried that is on the overbought level. If you can see RSI, okay, when the RSI indicator, right, being let's say the price is going above the line of RSI, it indicates overbought zone, and that's where you expect the price to start going down. That's what actually happened later, but we didn't know that, right, back then in January. Now, moving forward, also on my channel, as you can see here, I'm posting signals for trading, technical signals like Euro, New Zealand dollar, buy now, and you see the explanation, right, technically speaking, why it's expected to go up or down. So you can take advantage of that signals being posted every day so that you always know what to trade, what direction to trade, and you can set up your take profit and stop loss straight away so that your trade can go on auto trading. Right, moving forward, that's some more signals for the day, okay, and then we're going to the next one. So the next one says the first public release of ChatGPT debuted 3 years ago. So since then, the market, S&P 500, I mean the US market, added $24 trillion, right, by $22 billion every day. So see here, the ChatGPT was released here, and since then, you see how much the stock market, the 500 biggest companies in the US, gone up, right? So it means that they actually, they enjoyed, let's say, that ChatGPT announcement and the AI boom and stuff. So it's actually something very good for the stock market. Now, moving forward, right, look at this. Thought of the day. Whereas the patient's result will always appear, right? Great changes come quietly, step by step, day by day. And that's very true. So patience is the key, especially in trading, all right? Keep that in mind. Now, moving forward, 8th of January, again, Bitcoin, 90,000, dropped down by 2,000. Okay, we can see oil, right, $60, going up slightly. Gold at 4,400. Right, moving forward, oil price forecast for 2026. Now let's look at oil. Oil, we're gonna go in commodities, and we're gonna look at, let's say, Brent oil. Okay, so Brent oil, we can see the forecast. So they're forecasting that in 2026, the prices of this Brent and crude oil, but the prices of those gonna be somewhere between, let's say, 63 to 59. You see, somewhere between that lines what they expect it to be. Now, if you look at Brent oil here, right, and we're gonna look at, let's say, weekly, we're gonna see that's on the weekly chart, right? The highest levels, let's say, starting from September 2025, the highest level was 69 and the lowest level was 58. You see, so that is the range of oil, and as you can see, they're expecting that the prices will be more or less at the same level for the whole 2026. So for those who trade oil, it's a very important thing for you to know, all right, where to look at. Now, moving forward, all right, this is very interesting thing. A lot of people nowadays, they fall under different advertisement. They say that if you want AI system to trade on your behalf, just invest your $250 and AI will actually make you rich overnight, okay, and make you thousands and thousands. Now, what they did an experiment, right? And they used all known, let's say the biggest AI models like DeepSeek, like ChatGPT, Gemini, OpenAI, Claude, Master, Grok, and Gemini. And they gave all of them by $10,000, right, to trade. And guess what? All these AI systems lost money. So it means that AI system cannot make money in trading. I mean, a lot of people rely on it like it's something more, it's something smarter than a human, right? But remember that it's artificial. So AIs are built on past, and what they know is the past. So they don't know what's happening now, and they don't know what's happening now and how it can affect, let's say, trading in the future. So they don't know all that. That's why all of them lost money. So when you go to trade, and if you want to invest somewhere, right, investing in AI trading system, you can see that probably not a good idea. Moving forward, some more signals for the day. Okay, some more signals, right? GBP, Canadian buy, sell, and so on. Now we're going here. Okay, Bitcoin, 9th of January, Bitcoin 90,000, US dollar index 98, Brent oil 62, keeps going. Gold, same level, right? 4,472. Right, now moving forward, US governmental bonds. US governmental bonds have shown 7.5 increase in yield since the beginning of the year, right? And 2025 is expected to become the most successful period for American treasuries since 2019 crisis. Now, just so you understand what that means, the higher the percentage that they give on their bonds, and bond is actually the governmental debt, that means that the more risk, right, for the investors is now in the market in the US. So they need to give higher returns to attract more people to invest, to buy the bonds. So that's why actually the 7.5%, it's quite a lot by the way. Now moving forward, mortgage applications in the US reach a 2-year peak. Now, what does it mean? When the mortgage applications are rising, it means that people feel more confident in taking loans. And the reason for it is because in the US, they're expecting to start dropping down the interest rates, and the new Fed chair that is going to be appointed by Donald Trump is coming soon. And he's expected to start dropping down the interest rate heavily. And that's why a lot of, let's say, confidence is going to the market in the US that the interest rates will be lower, and they go to start basically buying more houses, taking more loans, right? So this is a good, let's say, news for the housing market. Okay, so now moving forward, Chinese stocks. JP Morgan has upgraded Chinese equities to overweight, above average portfolio. Now think about it this way, right? You probably heard about like NASDAQ, S&P 500, so majority of the let's say US stocks, right, and US indices. But in fact, the Asians indices, if we're gonna go and check indices together now, okay, and we're gonna go to futures, you will see that actually the Asian indices in 2025, they outperformed the US indices. So Asian companies done way better than the US. Now, if you look at, let's say, Hang Seng, right, and we're gonna open the, yeah, look, just today it gone up by $242, like almost 1%. But let's look at weekly. You see, weekly, steadily, the Chinese index, it's actually the number of the biggest Chinese companies, keeps growing, right? If you put monthly basis, you can see that starting from the, let's say, the beginning of 2024. So for the last 2 years, right, you can see the huge trend that the Asian companies keep growing, right? So if you're expecting, let's say, to trade this year and you want to trade indices, you may want to look into the indices in the Asian countries, right? Because they actually are outperforming now the US countries. Now we're going next, and here's about analysis of Eurozone economic growth, which is very pessimistic, okay? And at first glance, it figures look optimistic. You see the Eurozone GDP growth estimate 1.4. It's how much the Eurozone GDP gone up. However, if you look here, Ireland, which is a very small, let's say, country in the European Union, they represent, let's say, 4% of the whole economy of European Union, but they delivered 40% of regional growth. So 40% of the whole European growth goes to a very small, let's say, country, Ireland, and it's just because they have Google and Apple offices in their country. So Google and Apple pays taxes in Ireland, and that tax is actually creating 40% of the whole GDP of the European Union. And as you can see, the rest of the countries, okay, 86% of Eurozone, right, delivering just a small portion of their contribution to the whole growth. So it's just Ireland and Spain that contributes, let's say, 20%. So together, Spain and Ireland putting 60% of the whole GDP of the European Union. But what happens to the other 25 countries? You understand what I mean? So the European economy is not really doing well. Now, moving forward, is a US dollar smart investment? Again, a lot of let's say analytical researches and speeches about dollar going down. You see, it's around 60% of the world central banks plan to reduce a share of their investment in the US dollar. So that means that dollar stopped to become, let's say, a reserve currency, right? That previously been used by a lot of central banks. Let's say they were buying dollars. Now they're selling dollars. They're selling dollars, and that's the reason why gold going up, because they have a direct correlation. When the dollar goes down, gold goes up. Now, Tether, right? Tether is one of the cryptocurrencies, which is one-to-one to dollar, one of the most known ones, set a new record. So they keep buying gold. So imagine in the third quarter of 2025, Tether purchased more gold than all the central banks combined. So Tether is actually buying gold, probably because they want to back up, let's say, their currency in case of any financial crisis happening. So it's also another reason for you to understand that a lot of capital is actually going into gold, right? Not just from central banks, but also from crypto currencies, right? Total open interest in Bitcoin futures on major exchanges hitting record high. So you see, they still expect, okay, back in the days, we're talking now about what, 11th of January, they were expecting Bitcoin to keep going up, to continue going higher, right? And then we will see what happened later with that, okay, during this month. Now, key events for the next, like I said, every week I'm putting that events that's impacting the market. So here we go. We're looking at the next day. So now we're looking January 12th, Bitcoin 91, gone up by like 1,100. All right, dollar index 99. You see, it was a little bit higher than today. Today it's 97. Right, Brent oil 63, so it keeps going, and gold also 4,500, also going up slowly but surely. Now, Japan times the yields of Japan's 2 years government bonds has risen to 1%, the highest since 2008. Markets expect an upcoming rate hike from the Bank of Japan. And look at this, that was 12th of January. The market was expecting the interest rate hike in Japan. Now, what interest rate hike means? So when they increase interest rate, the Japanese currency is actually getting stronger, right? The higher the interest rate, the stronger is the currency getting. So keep that in mind. So on the 12th, they announced that they want to increase interest rates, okay? And then if you look what is going to happen later, we will check it together. Now, so we moving forward, China is urgently moving out of dollar into gold. That's what we just discussed again. So China heavily buying gold, right? That's what we need to say. Now, historically, data shows that the fourth quarter is traditionally the most favorable period for the US stocks market. Now, if you look here on this report, you see how the US stock market is performing, let's say, quarter by quarter. And the fourth quarter, which is actually now, it's happening January and February, is when the companies report what they did in the last 3 months in the third quarter, let's say. So the third quarter, it's actually was October, November, and December. And we're talking about Santa Claus rally, the period of time when a lot of companies basically involved in Black Friday, Cyber Monday, a lot of sales. So the last, let's say, 3 months of the year, usually, historically, at the best 3 months for the stock markets, and then by the time that January and February hits, they start reporting, okay, how much money and revenues they did in the last 3 months. We will cover that shortly as well. Now, moving forward, it's 14th of January, and we see that Bitcoin 95,000, we can see Brent $65, we can see gold at 4,600. Keep going. Now, that's what I was just explaining to you previously about the earnings season. So fourth quarter earnings season preview, first 3 weeks. So you can see that starting from January 12, companies in the US, they started to report how much the money, how much revenues they did in the last 3 months. It's the most important period of time for those that want to build their portfolios, because companies announce how much money they did or the losses they did, okay, so that you can select the right companies that have the best potential to perform very well, let's say for the next 3 months or for the next 6 months or 1 year, depending on your investment horizon. So like I said, the official earnings season kicks off as of today, 12th of January, right? And it's actually going until the end of February, by the way. It's still going as we speak. Now, Magnificent Seven, right? Share of S&P 500 market cap. Now, have you ever heard about Magnificent Seven? If not, then we're gonna go and check it together. Look at this. Magnificent Seven stocks, right? So for that, stocks. Now look, Magnificent Seven stocks are 7 of the largest, most influential and high growth companies in the world, typically including Apple, Microsoft, Amazon, Alphabet, Google, Meta, Facebook, and Tesla and Nvidia. So 7 companies inside S&P 500. And remember, S&P 500, that's 500 biggest companies in the US, and we can see them here, okay, S&P 500, and that's 500 biggest companies in the US. And just 7 of these companies represent 35% of the whole value of 500 companies. Can you believe that, right? So that's how they influence the market. So if, for example, if something happens with just 7 companies, the whole 500 index, let's say, will be under impact. That's what it means. Now, let's go and move forward. Okay, we're looking here, Statista top 10 countries by rare earth. Rare earth nowadays is a very, let's say, popular thing to discuss, especially by Donald Trump. So now you see that China is top number 1, Brazil might be the next target of Donald Trump. Okay, India, Australia. So that's the countries by the amount of rare earth, let's say, in percentages. So moving forward, okay, some more signals for the day to trade technically. Then 15th of January, Bitcoin 95,000, right? Gold at 4,600 almost. Okay, you see S&P 6,957, right? We're moving forward. Silver 87. Now, gold, JP Morgan expects gold to resume its rise and set a new record once Federal Reserve begins an active rate cut cycle. So when they cut interest rates, that's where the gold is going down. Sorry, my bad. The gold is going up because the dollar is going down. So when they actually gonna change the interest rate, drop down this interest rate, they expect that the dollar will continue going lower. And that's what actually makes the gold to go higher. Like I said before, they have direct correlation. So keep in mind that the probability of the dollar going lower and the gold going higher is there, right? Now, moving forward, some more signals. Cocoa, okay, also a commodity that can be traded. Now, very, very low levels, okay, and very cheap, let's say, cocoa right now. Now, the gold market 2025, ups and downs. Look at this, okay, very interesting article. According to Reuters, this year has been the largest annual increase in precious metal prices since the introduction of the gold standard, right? And the initial catalyst for the growth was globally instability and trade tariffs. Later, it was driven by market participants' desire to avoid missing out. Missing out, it's actually a fear of missing out. So when a lot of people see that gold is going up and they speak about it, a lot of people go and buy. So the gold goes up and up and up and up. And that's what basically pushes it also, okay, to that level what it came later. Now, moving forward, right? 16th of January, Bitcoin 95,000, right? Brent oil 63, gold 4,600, right? Silver at 90. All right, moving forward, here is a very interesting article. The AI industry is looking more and more like a bubble. Experts have compared it with the mortgage sector before 2007. So look at this. It's actually something very interesting to acknowledge. These companies, the biggest companies in the AI, let's say, what they do, what they do, they just invest in each other. So for example, Nvidia goes and invest in Intel goes and invest, let's say, in Oracle goes and invest in XAI. So they just putting money from one pocket to another to each other. But by the time they announce that, let's say Nvidia is investing, let's say in Nebius, right? Nebius prices skyrocket. Then Nebius invest in Coreway's prices skyrocket and stuff like that. So they keep increasing, let's say, the value by the sentiment, right? People think that, oh wow, they're putting, let's say, $100 billions into that company. But where they take that $100 billions, that's another question that is obviously need to be asked and answered, because that is not the real money. They borrow this money. So this is very important to understand that AI looks like a bubble. It doesn't mean that it's gonna, let's say, burst or like anytime soon, but keep in mind that it's coming, right? It may be something like first signs, and you're gonna see that with Oracle that dropped by 50% at some point, right? Later this week. Later this month, let's say in January. Now, moving forward, the total US debt reached a record $98.8 trillion, right? So the total debt in the US, which accounts federal governmental debt, $36 trillion, non-financial corporate debts, $21 trillion, and then corporate debts, $20 trillion, and household debts, $20 trillion. Guys, imagine, it's basically we're talking about $100 trillions of debt. Over that, imagine, this is the money that needs to be paid off. Now they're paying just the interest on that debt, okay? But at some point, they will not be able to cover that interest to pay that huge debt that keep increasing. So that's where the actual default happens. When they cannot pay their debts, that's where the crisis happens. And you can see now the debt just in the US, it comes now already to $100 trillion. Of money that do not exist now. So they need to be produced. It's either printed, okay, so that's again the devaluation of the dollar, or it has to be somehow basically paid off. Anyway, just so you understand, the US economy is in a huge debt right now, okay, and it actually accounts 324% of the gross domestic product if you put it all together. Now, due to the rising Middle East geopolitical tensions, I was recommending to be cautious to open trades during the weekends because of the Donald Trump announcing that he's gonna do something with Iran. Okay, so that's also something to be very cautious when this happens, because that creates a lot of volatility. Now, national debt, that's, by the way, something that we just covered, right? The US national debt that we're talking there. Now, financial struggles of Americans, okay, like we just said before, a lot of people have huge debts and they are unable now to, you see the share of late payments soared from 0.7% to 5%. People unable to pay their debts. That's the problem. Now, the S&P 500 hits the historic highs level, okay, and fear index remains elevated. So look, S&P 500, this is the capitalization of the market, $61 trillion. That's basically all the companies in S&P together. They represent $61 trillion market cap. So you see, it keeps going like crazy, right? Increasing it like almost every year. Now, moving forward, okay, we see the number of Google searches in the US on currency devaluation hits the record high. So that's something that we just covered now, all right? A lot of people talk about dollar going down and possibly a continuation of the downward trend, and people actually searching for that, okay? Americans don't like the currency to go down because we said for the last 22 years, it just lost like 50% of its value anyway. So US money supply M2 continued to hit new record high. Now, what is M2 money supply? It's the money in the system, right? It's the money printed, let's say, the amount of money. So it keeps increasing, and it means that's the money being in flow, right? So there's an inflow of money in the system. Now, moving forward, earnings season for Q4 is gaining momentum in the US. So we can see among companies that already reported, 79 beat their expectations on the earning per share, and 76% beat the expectations on the revenue. So it's quite a good number, not as good as previously, but still okay. Now, moving forward, this is another week and the reports and the calendar for the week. TradingView launches a ring for crypto traders. Those that trade cryptos and want to always follow the price can get that ring, I guess. Okay, now world central banks are again increasing gold purchases. So this just shows you that the central banks keep increasing their buying gold because they're shifting from the dollar. A lot of uncertainty, a lot of Donald Trump's, let's say, moves towards, let's say, either tariffs or no tariffs, friends or not friends, okay, make governments to decide to get rid of the dollar and to obviously buy gold as a safe haven, and obviously to protect themselves in case of, let's say, of a possible crisis, so they can have some gold reserves to rely on. Now, global financial printing press, okay, so you can see the world's largest economies are drawing in debt, something that we covered just previously. Japan public debt to 215%, US 125, Eurozone 95, China 93. So during this series financial shocks, governments actively activate monetary policy, resorting to large-scale quantitative easing, turning the printing press. So during this period of times when the governments have so much debt, they need to provide that liquidity to banks, because it's a lot of debt and the banks don't have that money, so they need to give that liquidity to the banks. So what they do, they start injecting, printing money, in other words, right? And that actually hits the currencies and hits a lot of assets. So keep in mind that nowadays it's a lot of debts all over the world, okay? And it's very expected that governments are gonna start printing money. So, all right, keep that in mind. Going forward, oil and gas price forecast, you can see that they're forecasting for oil, Brent oil, $65-$60, right, for Brent, 65-63 for Brent, and then 60 to 58 for WTI. So that's the range, basically, that the oil is expected to be ranging through the 2025-27. Moving forward, okay, January 21st, Bitcoin is 89,000, dropped down by almost 3,000, imagine. Okay, then we're looking at Brent oil 64, US dollar index 98, gone up. We see gold 4,800, also keep going up. Okay, silver 93. Some signals for the day. Okay, and then we look at S&P 500 is at a record high, while the fear and greed index is at the fear level. Historically, this combination has been observed before continuation of the rally. So look at this S&P 500. Okay, and as I was telling you before, this fear and greed index. So when the fear is there, right, it means that the prices are still low. So it creates an opportunity for the market to keep rising until that thing will go to extreme greed. And that would be the top, let's say, level when the prices of different, let's say, stock market, in the stock market will be at the highest level. That will be the extreme greed. That's where the prices usually correct themselves. So now the fear and greed index was at fear, and that's why the S&P 500 was at 6,800. Later it will hit 7,000. So it will actually come to that level and hit that level. Now we're going forward, okay, next day, 22nd of January, Bitcoin is at 89,000, almost 90,000, right? We look at US dollar index 98, right? We look at Brent oil 65, gold at 4,796, okay, silver 93. US AI startups raised record 150 billion in 2025. This is, again, what I was telling you before. Okay, all these AI startups, they're bringing money, but they don't really show value so far. So yeah, we'll see how that will go through 2026. Now, the US dollar has fallen by nearly 10%, something that we just checked together, but still another graph showing how the US dollar index was going down through the whole 2025, starting from January, okay, and that was the trend. And now it's basically representing about 10% drop. Financial reports of European tech companies. Now, if we compare European tech companies with the American tech companies, then you can see that in America, only Apple, Google, and Meta together create 3.8 billion in taxes, while in US, in the European Union, right, they have a lot of companies together that make just 3.2 billion, right? So high-tech companies, of course, in the US are the biggest ones, and they, of course, right, value more and create more. So that's just for you to compare the best, let's say, high-tech companies, right, into on two continents. Now, the secret of the progress is not speed, but consistently. Even a small step taken every day eventually leads to great results, right? So moving forward, 23rd of January, Bitcoin 89, right? We see gold at 4,960, so it's approaching 5,000, coming to a new record. Silver at 98, right? So AI boom. American tech billionaires earned $550 billion in 2000, thanks to the rapid development of AI technologies. So basically AI holders, let's say, and the owners like Elon Musk and the rest of them, they made $550 billion in the last 1 year. So US indices and precious metals hit new records. As you can see here, they show the S&P 500, they show Shanghai, they show Nikkei. We're talking about Chinese indices, we're talking about Japanese indices, right? We're talking about European indices, all right, and the world's indices. And you can see that all of them, right, they actually hitting record highs. They keep going and going. So the last year, like I said, was very good because a lot of countries were dropping down on the interest rates, and that is very good for stocks. All right, and then we moving forward, the total assets in global money market funds continue to hit record high, now approaching $7.5 trillion. That's what we said. It's the value of money in the world. So now it's approaching basically $7.5 trillion, right? That's the money in circulation, and it keeps growing. It means that it's more and more money being added into the system. Now, this is my video, by the way, from zero experience to open free trades in one session. That's what I did. Okay, live Forex trading explained in a Mickey Mouse language for beginners. So please watch that if you didn't. That will show you what your trading platform consists of. It's something that we did last time. Okay, we opened free trades using just a basic analysis, right? And then, of course, I would like you to take advantage of that video as well. So watch that if you didn't. Now, Jim Rickards, as bullish as Peter Schiff, expects gold to rise to 10,000, silver to 200, 2026. Have this in mind, okay, where they expect gold or silver to go. Sometimes the best step forward is to stop doubting what you have already done, trust your path, and keep moving. It's always important to actually, stick to your plan, to stick to your to your strategy, let's say. All right, moving forward, stock market rally 2026. So corporate profit growth, reduction in Federal Reserves, key interest rates, and the rapid development of artificial AI, basically technologies, will be the main growth drivers stock market economy. So I just want you to understand that the stock market looks very attractive in 2026 for those of you that are looking for an opportunity to invest. So the stock market could be something very, very interesting to look at, right? So, and like I said, this is the reasons why, by the way. Now, the dollar is becoming the worst performing currency of the decade. And like we said before, okay, dollars going down. Now, financial freedom begins with control over small things. Unnoticed daily expenses eventually cost more than large one purchases. All right, also makes sense. Now, the next week, let's say, with the reports, okay, initial job claims, gross domestic product, consumer price index, okay, very important announcements that create a lot of volatility in the market. All right, moving forward, earnings season, all right, earnings season keeps going, and we're looking at different companies that reporting during that week. And as you can see, among companies that already reported, 75% beat expectations, 69 beat expectations on revenue. Okay, so keeps going. The earnings season keeps going. Now, look at this. Futures for gold, silver, and platinum hit a record high. So gold hit 5,000, silver hit 108. Okay, we see platinum at 2,800, and then we see US dollar dropping down to 96. Remember, gold up, dollar down, and vice versa. All right, then we're moving forward. Already 750,000 homes in the US are without power due to short snowstorm, right? So more than 40 states have declared a state emergency. So look at gas surge, all right? We're gonna check that together, by the way, all right? You're gonna see what kind of movements, all right? We're gonna go to commodities. So when you observe the news, let's say for instance, you're watching your news on the TV, and they say that in the US it's or any other, let's say, place is a bad weather, right? And you go and check natural gas. Okay, so we're gonna put the graph here, and we're gonna put daily. So if you look here, okay, how much the price of gas increased. So starting from, let's say, 20 of January, right? 20 of January, the price of gas was $2.88 for a cubic meter, and then it gone up to almost $8, right? So it's like quadruple itself, right? Within how many? Like 1, 2, 3, 4, 5, 6 days. 6 days, the gas gone up so much, and then look how much it dropped down later. So it's a huge increase and huge decrease, just so you understand, right? So when you see something like that, right, something happens with the weather, you need to understand that, you know, companies like aviation, stock companies, for example, Boeing, right? If we look at Boeing, right? Let's look at Boeing and see what was the reaction of the price on Boeing. So if we look at the analysis again on the daily basis, right, we can see, right, the Boeing prices, you see 22nd, that's what 20 of the month, right? The 20 of the month, that's what the Boeing prices, the shares of the Boeing started to go down because of that thing with the US, because people cannot fly. This is just for you to understand how different news can impact the prices. So if you know that something like that is happening or about to happen, or let's say the bad weather is coming, you need to just have in mind that this is going to impact the energies. So you can go and take advantage of that. I hope that's clear. Now, the US market in 2025, right? So the last year of the US market showed impressive growth. Over $8 trillion was attracted by investors. So that's basically how the US market looked like. But we can actually check that together. Look like this, okay? So S&P 500. S&P 500, as I said before, consists of 500 biggest companies, right? And we can see how much these 500 biggest companies did, let's say, in the last 1 month. Right, let me see, 1 day, 1 week, 1 month. So in 1 month performance, you see their performance, Google gone up by 5%, Nvidia gone down by 7%, Microsoft by 12%. But if you look, let's say, on 1 year performance, okay, 1 year performance, then the situation will change completely. So you can see S&P 500, majority of companies closed the year with a huge returns. Google 64%, Nvidia 49%, right? Micro Technologies 321%, right? You can see like increased Intel, let's say 150%, right? So a lot of, let's say, companies did quite well. You can see them by NASDAQ, okay, Dow Jones, 30 biggest companies, Nvidia, right? And obviously 30 biggest companies in the US, NASDAQ, 100 biggest high-tech companies, how they ended up the year. You can see that Microsoft didn't really do well, right? You can see the Google probably was one of the top companies, as well as Intel, as well as Micro Technology, okay, what they did with regards to the returns, right? Apple 21. And then we can see the whole world, let's say, right? If we look at the whole world, how the stock market in the whole world did in the last year, we can see that the whole world basically is in green. So they did quite well. So it means that basically the trend may continue this year as well. But if you look at cryptos, right, and you look at Bitcoin dropped down by 27%, Ethereum dropped down by 22%, and just a couple of currencies that gone up, but majority of them dropped down significantly, right? Now let's move forward. Moving forward, okay, so here was the alert that again, you need to be very cautious even now, by the way. If we're talking today, the new escalation is coming, and it might be anytime soon now with Iran and US. Okay, again, here we see the US dollar index testing 15-year support line, just something that we covered previously, right? The dollar index now is at this level, like we just said before, okay, 97, all right? Here we go, 97, so it's at the lowest level right now, and it's testing that level to possibly either go lower, right? If it's obviously the interest rates are gonna start going down. US dollar collapse, okay? Again, the US dollar is expected to go down in value, right? And that's what we said. Now, this is also important about Japan is maintaining close contact with US regarding the yen's exchange rate. In case of sharp fluctuations, strong weakening against the dollar, coordinated measures may be taking Japanese regulator. Now, these red lines here, they show you when the country is going and intervene. So when they see that their currency is dropping down, let's say, they can go and they can start buying their currency by selling, let's say, US dollars. That's where you see the huge, let's say, drops in currency values, right? In the value of different currency. We're going to look at the US dollar, let's say, and Japanese yen, just so you see how much they gone up. Right, I mean the US dollar versus Japanese yen. So we're gonna go to look at the USD JPY. So for example, okay, we're gonna go and open USD JPY. So let's observe, okay, the daily basis. Daily basis, 1, 2, 3, 4, 5, 6, 7 days, one week that the dollar goes up against the Japanese yen. But if we look at the monthly, you see monthly, weekly, all right, no, weekly better. Weekly better, you can see that the dollar was going up against the Japanese yen weekly, and it was coming to 160 level. Now, every time when the market is reaching this level, the exchange rate between the US dollar and Japanese yen, the intervention happens. That's basically what it means. You see, when it comes to 160, the intervention happens and the price of dollar goes down against the yen. And you see every time 160 drop down. Here it gone 160, drop down. Here it gone to 160, drop down. Here it comes to 160, drop down. Now it's approaching 157. So what do you expect to happen once it goes to 160 again? All right, so this is a rhetoric question. You can obviously answer it yourself. Now, financial markets, the US dollar index recorded Donald Trump going down, again about the dollar. The world's largest central banks cut interest rates in 2025 by the fastest pace, right? Like I told you before, why the index is going up in the whole world, because they keep cutting the interest rates in other countries, right, all over the world. Now, global stocks have overperformed US stocks in returns this year. So this is just for you what I told you before. The global stocks, what we just looked at now, okay, world, is actually outperformed the whole US market. So the global, if you would be investing, let's say, in the global indices, you would be, you would make more money than investing, let's say, in the US indices in 2025. Now, money loves consistently more than risk. Steady, sensible steps almost always beat rare, bold decisions. Nothing to say. Okay, it's something that I really agree on. Now, Bitcoin network cools down. A decline in active addresses signals a slowdown in trading and shifts towards accumulation phase ahead of future volatility growth. So it means that there's less interest in Bitcoin, okay, and less interest means less demand. So you can see what's going to happen with the price later. Now, moving forward, you can see the basically what changed in 2025 in capitalization, in value. Gold now in the world is number one asset with $35 trillion capitalization. Silver gone to the second level, $6 trillion. Nvidia is a company that is actually $4.5 trillion worth. Google almost $4, and Apple $3.5 in value, right? So gold and silver now are hitting all-time highs, all right, amid geopolitical instability and inflation risk. Okay, so moving forward, okay, Bitcoin 88,000, gone up by 1,600, and that was on 27th of January. Okay, dollar index 97, oil at 64, gold at 5,100, right, and silver at 109. So you can see the weakness of the Japanese yen, right? The yen shows in black on the chart has weakened significantly, matching the strength of the Turkish lira, shown in blue. The latter serves as a vivid symbol of currency instability and poor monetary management. So the Japanese yen drops down as the Turkish lira, just so you understand. That's what it means. And it's not really good for the Japanese yen because, it's devaluing a lot. Now, what we need to look here, over the past 3 years, gold has risen 170%, silver 210%, and platinum 100%, okay? And that's because of geopolitics, monetary easing by global central banks, cutting interest rates, rapidly increasing debt in major countries. That's what also we cover today, okay? And high budgetary pressure on the developed nations, attempts to seize Russia's sovereign assets. So that's the reasons why the gold and metal prices were actually going up a lot. This is something that we just checked about natural gas, how the price surged. Remember, within 1, 2, 3, 4 days, it was going up like crazy, okay, because of that weather. Now, more signals for the day 27th of January. Cocoa has experienced its largest annual drop. Cocoa is also a commodity, right? And it's actually dropped down a lot, creating an opportunity to possibly buy from the dip later. The dollar sell-off continues. That's what we said. Dollar dropped down 96%, dollar index, okay? And we said again that the dollar is devaluing, right? Citibank forecasts silver to go to $150, right? Due to high speculative demand and shortage of physical metal outside of the US. So you see that's obviously the skyrocket of the silver, but Citibank is expecting it to go even higher. Euro gone up against the dollar. Bullish bets in the option markets for the further euro appreciation against the dollar has risen, right, to the highest level since 2020. Let's observe that together. Okay, we're gonna look at euro US dollar just so you see where that stands. Okay, and let me go here with you. Give me a moment. Euro USD. So we look at Euro USD, and then let's look at, let's say, weekly chart. So on the weekly chart, you can see that the euro, starting from January and from 1.02 to a dollar, has increased to 1.17. And at some point it was reaching 120. And since then it dropped down, right? And now it's at 117. So it keeps going. So in a euro is expected to continue rising against the dollar for the long run. So keep that also in mind. Sometimes the grass looks greener elsewhere because it's artificial. Also, very good thing to keep in mind. Now, gold, 5,150, new record. Okay, and also dollar goes down again, and Trump says the dollar is finding its own level, and that's fair. It can go up and down like a yo-yo, and I don't think the dollar has fallen that much. That's what Donald Trump said. And he actually, after he said that, dollar gone down, like I said, to 95, right, dollar index. Think about it this way: cheap dollar is actually very good for the U.S. Stocks, for the U.S. economy, because cheap dollar means that countries from let's say other countries, let's say, they can exchange their currencies and buy more dollars. If they buy more dollars, they actually able to buy more shares, let's say, in the US, right, if they're investing in the stock market. So when the dollar goes down, it's good for exporters, right? And at this point of time, as you can see, it's going down a lot, and Donald Trump is saying that he's not really worried about it. Okay, so that's fine. Again, the US dollar, so it's the January, the month of the January was all about the dollar and going down. So a lot of, let's say, announcement and news was about that. And it says here that it's fall down by 10% again. Now, moving forward, okay, Bitcoin at 89,000, okay. We can see oil at 66. We can see now gold at 5,200, gone up by $146 within the day. So moving forward, yields, Japanese governmental bonds continue to rise amid expectations of further rate hikes. So when the yields, right, when the bonds, basically the yields of the bonds are going higher, it means that there is a lot of risk for investors. So they need to give more percentages for the debt, let's say, to attract more investors. So that's not good. So that's basically is a very important sign that the interest rate hike is imminent, right? Moving forward. So here we're going invasion of Venezuela and fate of the dollar. Again, what Donald Trump did in the beginning of January and captured a president of another country, started the war, let's say, or tensions that the war is going to start in the Middle East and stuff. So all that is actually breaking down the ground, let's say, of the dollar as a safe haven as it used to be before, and governments, like I said before, getting rid of it. So some more signals for that day. And then we'll see that gold, new record, 5,230. We can see S&P reached the record of 7,000, right? And that was 28th of January, 7,000, right? We can see that Goldman Sachs was increasing the price target for aluminum from 2,500 to 3,150. So this is another opportunity for you. Aluminum, if you're looking to invest into something for the long run, that might be a good opportunity for you. Now, that was my next video, Forex trade, live technical analysis trading for beginners. That's what we did last time when we traded, let's say, free trades on the on the technical analysis using investing.com, if you remember. Okay, so I want you to watch that video, and you can learn the tool that will allow you to get access to signals and understand free signals, basically, and understand how you can trade relying on yourself and not on anyone else. Now, moving forward, 29th of January, right? We're coming to the end of the January. Bitcoin is at 88,000. Gold is at 5,500. US dollar index at 96. Okay, silver it's 117, right? And then we're going next. And we see here that Australian dollar, New Zealand dollar, and Canadian dollar, there were basically a strong rally in the currencies of commodity dependent economies. So Australian dollar, New Zealand dollar, and Canadian dollar are countries that are exporting a lot of oil, they export a lot of rare earth, they export a lot of, let's say, milk, they export a lot of, let's say, coal, gold, silver, and other, let's say, metals. So that's why Australian dollar, New Zealand, Canadian dollar were very good, let's say, very strong currencies, all right, for the last month of January. Now, we see stocks moves after earnings. So after the earnings season, that something that I told you before, Microsoft shares gone down by 6%, Meta shares gone up by 7%, Tesla gone up by 2%, and IBM gone up by 8%. Now, record demand for gold by central banks. again, another news that the central banks are buying heavily gold. Okay, this is also important to acknowledge that a lot of money going into that. Now, imagine what 100,000 invested a year ago in various assets would turn into. So imagine that a year ago, starting from January 2025, you would be investing 100,000 in different class of assets. Let's say if you would invest in gold, you would make 80% return. In silver, you would make 242% return. And then if you look at the rest of the, let's say, cryptocurrencies here, how much you would lose. With Bitcoin, 14%, with the Trump coin, let's say 82%, with Millennium coin, right, 98.8%. Crazy. Anyway, moving forward, okay, Bill Gates could have been the richest, but look at this. Look how much money these guys have, right? Elon Musk, 632 billion, Larry Page, 256. When this money can be spent, that's the question, right? And how many years you need to actively spending to spend that money. So it's a huge money that they have. Now, moving forward, some signals for the day. Okay, Elon Musk, you see, he got now, right, 684 billions, right? That's how much he's worth now. So he just increased by 85 billion in 2 days. Crazy. Now, control of your income, but your decisions. So control not your income, but your decisions. Consistently making the right financial choices over the yields. Over the time, yields greater results than high but chaotic earnings. Also, I agree on that 100%. Now, Bitcoin 82,000 on the 30th of January, dollar index 96. You can see gold 5,226. You can see silver 109. Okay, and we can see Golden Cross hit a new Bitcoin historical high. So Bitcoin came to this level that historically it either can go up or crash like crazy, right? So we'll see what's going to happen with that. Now, the Bank of Japan raised the interest rate high, right? Or to by 75 points to 30 years high as expected. So imagine what we talked about in the middle of January, that Japan is expected to increase interest rate. That happened, right? And just so you see what happened to the US Japanese yen, right? US, where we had that, US dollar Japanese yen. So they did that, and they did that when? That was 30 of January. Let's observe that, 30 of January. Okay, where is that? 30 of January. Here we go. Now, here we go. That's where as you can see, the US dollar gone up, right? Started to go up after that happened, after the interest rate was increased, like a huge basically, you see, increase after the drop happened. So what we're talking now, all right? So look, gold ended up the month with 8% drop, silver 18%, platinum 18%, right? And then palladium 15%. Now, Bank of America forecast gold to rise to 6,000 as early as this spring. So it's another opportunity for gold, basically, for this year, that it may continue going higher, right? And that's something that you want to have into your arsenal as well. Now, global gold demand exceeds 5,000 tons. So this is just for you to know that demand keeps going. So if demand keeps going, the price may follow. Now, this is just for you to see what's the most, let's say, democratic country did in the last, 60 years, 70 years. How many, let's say, different conflicts that there were intervened, right? So that were involved, right? And that's all about money, by the way. Now, compound global central banks currently actions on interest rates. So I just want you to see the interest rates, first of all, country by country, what the interest rates they have now in every country. And as you can see, last move. So majority of countries right now cutting their interest rates. As I told you before, okay, they keep cutting, and obviously lower interest rates is always good for the economy, because the loans become cheaper, right? And it become easier to repay that loans. So keep that in mind. It's a very good sign of, let's say, stock market performance, and is also a very good sign, let's say, of gold possible performance as well. Now, gold market capitalization as percentage to market supply, right? So you can see it has risen to the highest level since 1930 and significantly exceeds the levels of the 1970 when gold prices surged too sharply as they now. So you see gold gone up to the same levels as they were at 1930s, right? And this is basically versus the money in the market, the money supply. All right, now the gold surpasses US treasuries and central banks reserves. that is a very, very important sign. So in the past, the central banks of different countries that were buying US debt because the US economy was the most, let's say, advanced one and the most trustworthy ones. But now they actually shifting from that. So they're selling their debts of the US. They don't want to hold that because the US is not doing really well, right? And then what they do, they're actually putting that money into gold. That's what you can see over here. So when you choose calm, you choose strength. And not everything in life requires a struggle. Sometimes inner stability is enough. It's all about patience, by the way, right? So now the fear and greed index, something that I told you before, was at 16, and that was on the 31st of January, was at 16, very low, very stressed, okay, for a lot, and a lot of opportunities for others. So fear and greed 16, Bitcoin price 84. Now, if you see here, silver prices, silver in New York, by the way, this is very important. Look at this. Silver in New York is trading around $83, while in Shanghai, the prices of the physical metals reached $130. The difference is over 40%. And includes the value-added tax. Now, on the Chinese market, the prices are formed based on actual demand and real transactions. In the United States, trading is primarily in paper contracts, not backed up by delivery of physical silver. So the ratio of paper contracts to physical assets there is approximately 350 to 1. So that means that they actually selling, right? They're selling more silver that actually exists in the market, right? And that's why the disparity, right? So the difference between the price, let's say in New York and in Asia, is actually coming to 40%, because in Asia they trade with real gold, right? With real silver or gold, and that's why actually, what happened later, as you can see here, the same day after what I just read. Look what happened. A huge crash happened with gold, with silver, with platinum and palladium, right? And if you can see here, largest crash in decades. Over $7 trillion wiped from the precious metals market within 36 hours. Silver fell more than 30% and dropped below 85 per troy ounce, losing almost $2 trillion in value. Gold declined 13%, fell to 4,900, right? And lost $5 trillion in capitalization. Platinum dropped down by 27%, right? And palladium by 21. That's what I was just explaining to you here. You see that disparity, right? That 40%. It's actually played out later, right? The next day, what happened is that the price dropped down to make it like where it has to be, right? When the actual supply is at that level. Now, US dollar will be replaced by gold, according to Peter Schiff. So he's expecting that the US dollar will be replaced by gold in the reserves. Now, the last day of the month, US troops coming towards Iran. Okay, keep in mind that. Unrecognized losses of American banks. Look at this. This is a huge problem. This is unrealized losses. So American banks right now sitting in a huge minus of their liquidity. So they don't have enough liquidity, right? And they need some liquidity. That liquidity can be given to them by the Federal Reserve in form of printing money and giving it to them. So it's actually a big problem, because if they don't have that money, it has to be given somehow, and that money has to be printed. And that is another sign that a possible drop down in the market, let's say, is coming. So the market shaking by three major events. Now here you can see that over the past week, the global economy faced an unprecedented situation. Three historic anomalies, Six Sigma, occurred simultaneously, all right? So you can see Japanese governmental bonds play a key role in the world economy. And what happened? Okay, Japanese sovereign debt, silver prices and gold prices, okay, gone to these levels together. So that's some sort of a sign that, the possible crisis, okay, is somewhere right around the corner. So the three major waves of liquidation totaling 1.3 billion occurred in the crypto market over the past 24 hours. Bitcoin keeps going down, 78,000, crazy. And it seems that the continuation of that trend will follow. Now, the New York had ahead of the financial crisis, the mayor of New York has announced tax hikes for wealthy residents and corporations due to the city's massive financial instability, which exceeds that of the Great Recession. Again, what I told you before, no money. Even the New York, biggest state, okay, is actually down on cash. Now, Trump has announced the Trump account program as part of big, beautiful initiative bill. Okay, the fund will be invested in the US stocks. So think about this, under the program from January 2025 to December 2028, every child born in the US will receive a deposit of $1,000 into special tax incentivized investment account. The funds will be invested in the US stock indices, funds such as those tracking S&P for long-term growth. So imagine, in times of, let me show you something very, very important, and you will check that with me now. We're gonna observe S&P 500. Okay, let me check that with you, right? S&P 500. So during COVID, this is gonna be very good example, right? I'm gonna put that on the weekend. Okay, that's 2025. No, we're gonna put monthly, right? I'm gonna bring it here, right? Look at this, 2020. That's where the US market dropped down significantly. S&P 500 dropped down a lot because COVID started. You can see for 2 months, right, the whole market was going down. And then what happened? The US government decided to start giving so-called helicopter money to people. They start giving people some money, right, to support them. And all that money going into the stock market, because Americans, they like to invest in the stock markets. So what happened later? The market just skyrocketed, right? And it was going up until the war between Russia and Ukraine started. So that's why the inflation started going up and prices for energy started going up. But up until then, starting from 2020 and 2022, let's say 2 years in a row, the US market, stock market was just flying because of a lot of money injection to the capital market was going through, that money was giving to people. Now, as you can see on this news, Donald Trump is expecting to do the same now, but to all the American children, okay? So that is a lot of extra liquidity expected to go into the stock market. So the largest gold buyers over the last 25 years, you see, the largest gold buyers are Russia, China, India, Turkey, Poland, and so on. So Russia, China, India, and of course, this is because they are the main opponents of the Western world. Let's put it that way. Okay, so now we're looking at February 1st. So listen to this, okay? So what we can say now, okay, this is 1st of February. We're gonna observe that already on our next monthly observation, right? Next monthly session that we're gonna look what's gonna happen in February. But today, I just wanted to go with you and just to give you a quick overview on what happened, let's say, through the whole January. And let's quickly summarize, by the way. Let's quickly summarize. We're gonna talk about different different assets, let's say, that we cover today. So you can, let's just go here and look at them like this. Give me a moment. So if you go here and start from Forex. On Forex, the opportunity that we noticed through January is that any currency that is going against the US dollar may increase in value, right? So the US dollar keeps going down, and it's expected that euro, let's say, that is expected to go higher versus the US dollar, same as to the rest of the currency. So if we're talking about, let's say, the Forex market, then you have opportunities, let's say, with the US dollar, you have opportunity with Japanese yen, US dollar, Japanese yen as well. Okay, so these currencies that's actually connected to US may have good opportunities for you to trade. Now, if we look at the indices market and we look at, let's say, S&P 500, Dow Jones, NASDAQ, these are also looks to be attractive for 2026 because a lot of, let's say, money is coming into the indices. They did quite well in the last, if we customize it like this and we put it, let's say, monthly, okay, weekly, and then daily, and then for 5 hourly, right? So we can see that on the monthly basis, all these indices are giving a strong buy recommendation, right? Strong buy, strong buy. So all these indices, and I'm talking about not just US, but also Asian indices, European indices. So you can see they actually have a good potential as well. Now, moving forward, stocks, okay? Stocks basically just companies. Here, you can create, let's say, your stock portfolio based on the earning reports that are running now. So you can check, let's say, what stocks did in the last, let's say, for example, Microsoft. Why Microsoft dropped down after the report? Okay, you can see that in financial. Look at earnings. Okay, and we're coming here and we see the last earning for Amazon was on 28th of January, like we said, right, like a week ago. And Amazon did that Microsoft did quite well. You see, they actually keep increasing, and look how did they do up until now, all right, through all these, let's say, quarters every 3 months. So it seems to be a very good company to invest for the long run anyway. Now, moving forward, so that is basically for the stock market. Now, also, we discussed that you have, let's say, commodities. On the commodity market, like gold, for example, right, you can see that, for instance, gold today dropped down to $63. Okay, however, the opportunity for gold is to increase in value, okay, and a lot of analysts look at the monthly chart. A lot of analysts expecting that the trend will continue because a lot of uncertainty is still in the market, okay, so the next price target for gold could be 6,000. And now since gold dropped from 5,000, let's say 500, it dropped down, let's say, to 4,800 now. In fact, it dropped down even lower, but it's already gone up by 440. So if you look at the daily chart, you see from 4,600, it dropped down to 4,500, and now it's at 4,800. So slowly but surely it keeps going, and the trend may continue, right? So that is obviously about gold, similar to silver, by the way, right? So if you look at what else we have to look at? Okay, so also oil, all right? So if you look at oil, we also said that with oil, there's no much of the trending that is expected to happen, okay? Probably the price of, let's say, 68 to, let's say, 50, 55, let's say, will be the range. So if you're trading oil, keep that in mind, all right? Now, I think we covered today the most of the currencies. Look, I didn't mention Bitcoin, okay? And by the way, we can look what happens to the Bitcoin BTC today. Just so you know, if you're investing in Bitcoin, it seems that Bitcoin is in a very bad situation. You see, today it's already lost 6%, crazy. 71,500. Look at Bitcoin, right? We're gonna look at it like daily chart. You see daily chart as how many days it keeps going down, starting from 90. Look at monthly, so weekly, all right? Look, the highest level of Bitcoin was 127, and that was in October. So since 127,000, it dropped down to 71. So it's already lost basically what? Almost half of its value, right? Within the last couple of months, and it may continue going even lower. You see, like 3 weeks going down. So this is pretty much what I wanted just to cover with you. You see, it's taking us more than an hour just to observe January, but it's worth it. Now at least you know why these, let's say, assets are having this price, what the price is now, okay, what created, let's say, this movements through January, and what kind of expectations now you have according to, let's say, market analysts, and according a lot of other factors that we covered today. So now you know that there's a lot of other opportunities this year, and I will be discussing with you these opportunities on my next videos. So I really would like you to subscribe to my channel now, to subscribe to my Telegram as well, okay, so that you can always be in a position to understand what is coming. And as you can see on my Telegram channel, I'm posting something before something happens, right? In the market, they say buy on rumors, sell on news. So when you hear news on your TV and you go to the market, it's too late. The market already reacted on it. So you need to understand when this news will come up by just taking small pieces of information, putting them down, okay, and then understanding where the market may go next. Like, for example, I was giving example with Japanese yen and the interest rate that is expected to happen, which happened later, and you could see Japanese yen basically skyrocketing like crazy because of that. So what I'm trying to explain to you here is that understanding the news, understanding how to read them, understanding their impact is crucial. Now, if you just trading, right, and you don't follow the news, then your chances to succeed coming to zero. Most likely you're gonna lose your money on the next Donald Trump speech. However, if you, let's say, follow my channel and you get access only to the most essential ones, you could see that I'm not posting there like bullshit or something, sorry for my French, just the most essential things that really impacts the market, that really creates that movements in the market. So like I said, follow me, right, and subscribe to me on my YouTube channel, right? I'm also running my one-to-one trading academy where I'm helping my traders to get started one-on-one, face-to-face. So you can discover that as well in the description of my video, right? Check on my website and get in touch with me. I offer free one-to-one Zoom sessions so that I can help you to discuss your goals, to understand your plans for trading, to identify your level, let's say, of experience, your trading, let's say, your trading plan, okay, your risk appetites and stuff. So get in touch with me. We will discuss that, like I said, free of charge, all right, just for you to understand if trading is for you or not. And of course, if you have any questions, of course, if you have or you need any clarification, or you have anything in your mind that you would like to share with me, please reach out to me in comments and then leave your comments over there. I would like to see if there's anything that would be interesting for you, and I will create that for you. So yeah, this is it for today. It was my great pleasure talking to you again and explaining to you what I explained to you today. Like I said, yeah, let's see what's going to happen during February. It's a lot of things happening now, and I really want you to be involved, and I'm posting them on my Telegram channel every day. I'll see you soon. Okay, watch my videos that you didn't watch yet, and yeah, let's keep in touch. Have a lovely day. I wish you all the best, and I'll see you soon. Bye-bye for now.